Welcome to TradeTheNBI.com. This is John. This report is for the 10th of October. And well, no surprise. I mean, we started off with a little bit of weakness due to the fear component from potential spread of the contagion, as we talked about the other day after the Gaza incident, and whether or not that will spread to Iran and uh, potentially threaten oil and shipping. And of course, oil markets responded as expected. Um, but that new money coming in had to go somewhere, and without any concrete developments, it was turned around and bought right back up, and as expected, closing above that previous algo level, which we knew they were accumulating right in this area, and consistent with the MBI readings as well as the move of the DOC. So no surprise in the shakeout continuing. So despite the news, the readings still performed as expected. NQ was already looking more solid and already moved above its 38%. So it's been the leader from the turnaround setup and pretty clean. No complaints whatsoever about that. When we look at TLT, little fade off from treasuries. The expected potential that if you have world calamity, Fed's got to ease off just a little bit and at least or provide liquidity from additional sources, which certain that took place, which eased markets off. But there was no way to stop oil from making. This is modest. If you see even the slightest incursion in the Gulf area involving Iran or anything else, this is going to blow out in huge fashion. So that's the concern, and there really aren't many safety nets as far as protection goes because um, that incident can happen at any time, and traders are going to be prepared for it. It's not like you're looking at a glut of oil anyway. So tight supply and the potential threat, it's going to scare people to want to pre-purchase, thinking that things could get out of hand. From a euro standpoint, kind of put it in hold. It started off a little bit weaker, but improved a little bit in there. And you know that central banks around the world were providing as much liquidity as possible to make sure things didn't get out of control. There was no way to stop this. I don't care how much manipulation you're pushing onto gold, and that when you get this kind of crisis situation, that's going to be just a bit too much. And with this extreme move to the low side, gold has quite a potential to move to the upside, particularly if things get remotely more tense. And with Israel's declaration, they're going to block off Gaza, and that that is going to create added turmoil in the Arab world. And how long before any of that cracks and/or causes other spreading conflict? The Israelis have already bombed into Lebanon and that, and so the idea of a broader conflict and drawing the U.S. into it really uh, creates some interesting things, particularly when you see the tactics of uh, Hamas and then using stuff that we were seeing from the Russian-Ukraine front with the drones and that capability. It really kind of will be interesting to see how modern armies adapt to that. No real bonus for Bitcoin on this at all. And ETH. So gold was the go-to in the security threat, and your cryptos left by the wayside, as they say. So we had started off with that beautiful move, and of course the news created an artificial dip, which had that move out. And that happens. This was, it's one of those one-off situations where that panic mode hits first, and then the recovery reaction from there. Not a surprise from that standpoint, but we could see it from early morning. There was positivity going back a little bit when the futures first opened. It was a bit more of a significant dip, and things modified as there was no real dramatic contagion or anything that spread. There was a lot of stuff during the day, but at the end of the day, nothing dramatic took place that would cause people to think that something catastrophic was taking place. As much as things may be of a concern, if oil continues to creep up, this is definitely going to be a hard pill to sustain. Plus, you get a lot of people moving to the bottom side of things looking for a short opportunity, and that's right picking for for short covering, and that's exactly what you got. So all in all, I think that was pretty spot on to what the indicators were looking for. But I think in broader time, and if things begin to continue to escalate, the downside definitely is going to be a bit more attractive from that standpoint. But there's always that pain idea, and the pain trade at this particular moment is going to be to the upside because it goes against logical thinking. And when things feel a little more complacent is when. That's when the hammer usually comes in place. It's always opposite of what the conventional wisdom is going to give you. As always, though, I'll continue to update you on the Skype chat. As always, trade well. We'll talk to you later.